Hello smart money traders, you're welcome back here. In this video I'm going to show you the clear difference between a breaker block and a mitigation block as taught in the ICT concept. This is in response to a lot of questions I've received concerning the simple difference between a breaker block and a mitigation block. Now I'm going to show you everything step by step in this video, so make sure you stay to the end to watch everything I'm going to show you. Now let's start by sketching what a breaker block is and a mitigation block is before we come back to our chart and spot them literally. I'm going to show you what exactly a breaker block is, and then I will show you what a mitigation block is. When you see price behaving this way, if you see price creating a range like this, normally what we call this is basically a normal price action where you see price breaking structure. Okay, your normal smart money concept, this is a break of structure. And if you are trading this kind of price action, you want to see that price come back to either an order block or a fair value gap. This particular order block is called a bullish order block because we expect price to come here and then push up again to the upside. But if this order block could not hold price and then we see price completely crashing into this order block and then coming back to retest this order block before pushing down, is simply what we call a breaker block. Okay, this is no longer an order block but a breaker block. Just like we have two types of order block, we have a bullish order block and a bearish order block. We also have a bullish breaker block and a bearish breaker block. This used to be an order block. Okay, this particular candle used to be an order block, but as it is now, it is no longer what we call an order block. It is simply a breaker block, a bearish breaker block for that matter, because as price comes back, we want to see that price gets rejected from here and then we take our trade from that particular candle. That is a failed order block. So what we call a breaker block is basically a failed order block, and you want to see it take liquidity above this level. We want to see it take liquidity above here first and then crashing down, peak liquidity below here. So it's basically taking liquidity on both sides. Here, this area, as liquidity gets grabbed there and then above here. So a breaker block picks liquidity on both sides before it gives you that entry. Peak liquidity here, crash down, and then peak liquidity below, comes back, and that is exactly where you want to enter your trade. So this is exactly what we call a bearish breaker block. The same way you can see your bullish breaker block when you see price action like this come back, take liquidity below here and then crashing up to that side, coming back to that particular level. That is exactly where you want to enter your trade. So it's the same thing but the opposite way. So your order block is going to be here. Okay, this particular order block that failed to reject price to the downside is what we're going to mark as our breaker block. As price comes back to that particular place, we want to make sure that we enter trade from here this time around. This is what we call a breaker block. You want to make sure you stay to the end because I'm going to show you an indicator that will help you to get all this automatically on your chart. So as you enter trade here, you want to get your target first to this level and then you can scale up as you take your profit. So this is exactly what a breaker block is. A bearish breaker block and a bullish breaker block. Now let me show you what exactly a mitigation block is. As we see a breaker block takes liquidity, a mitigation block is basically when you see price behaves this way. Okay, now a mitigation block will fail to pick liquidity above. It will simply come here. It's a failure swing. Okay, as price fell to pick liquidity above here, it came crashing down, and this particular bullish order block failed to hold it. Then we expect price to come back to that level and push down. Okay, the only difference is that a breaker block picks liquidity above before crashing down. Okay, we see liquidity above, and then a mitigation block fails to pick liquidity above. So as price comes back to this particular order block, we want to take our trade right here. So this is exactly what a mitigation block is, a bearish mitigation block. In this regard, we have two of them, a bullish and a bearish mitigation block, just like I've shown you in a breaker block. So price fell to pick liquidity above. That's a failure swing because normally we want to see that we pick liquidity. As it crashes down, we expect it to come back and hit this level. And then the same thing happens when you are seeing a bullish mitigation block. Also, you see price comes like this, fail to have any grab of liquidity. As it comes back, you want to take your trade from there. So this is exactly what we call a bullish mitigation block. This is a bearish mitigation block. Okay, I hope this sketch is important enough for you. And then let's go back to our chart and see how we can spot this on a literal chart. Now let me show you something very important here, an example of a breaker block. Let me just give you an example of what it means to see a breaker block. Okay, now look at this price action right here. If you are seeing my chart, make sure you watch everything I'm demonstrating here. Look at what I'm saying. As price came from here to this level, had this push up, came down to this area, and then push up completely upside. Now this is exactly what a breaker block looks like. In this regard, a bullish breaker block, because we expect price to come down to this level, this particular area, and then push up again. Okay, from here we want to see price push up again. So look at this price action. As price came to this area, push up, your bullish breaker block is basically the last green candle that price printed before coming down to this area to grab liquidity. What we are expecting normally is that as price came back to this order block, this particular order block, a bearish order block, we want to see price push down from here. From here, we want to see price push down, because that is what we've seen price did. It has taken liquidity below here. That's a break of structure in a normal price action, and then we expect price to push down, but it failed to hold price. Now it becomes our breaker block. I hope you get this. It becomes our breaker block, a bullish breaker block, because price will definitely come back to that area and then push up again. So that is exactly what we call a bullish breaker block. This one, the last green candle, is our bullish breaker block. So as price comes back, we want to take our trade from here. And then your stop loss is basically going to be below the breaker block. Okay, and then don't forget, your target should be at the recent high. Then you can scale up as price gives you an opportunity to scale up. So if price comes back to that area, as you can see price coming back to that area, this is exactly what you want. And then price gives you the exact thing you're looking for. So you can see it's reached that take profit level. So that is exactly what we mean by a breaker block. Now you're going to see this time and again as you go through your chart. Let me see if I can see this happening again and again. You can see price even coming without stopping you out there. Now look at another breaker block. It gives you an opportunity to enter again at this area. Breaker block happened. Let me show you that. Right here, can you see a breaker block at this area? Look at what I'm saying. Grab of liquidity below here, and then we have price coming back up, grabbing liquidity on both sides. Breaker block. Okay, break below. This is like a break of structure. We're supposed to see what the last green candle as our breaker block. This last green candle is our breaker block. As price comes back, let's assume we have not seen this happen. As price comes back, what do we expect to do? We take our trade from this last green candle. As price comes back, our entry is going to be here. Okay, and then our take profit. Me, I don't have problem with having my take profit from 1:1 as far as the trade is going to give me exactly what I'm looking for. So as price comes back, you want to be part of this trade and see how far it will go. So this is exactly what a breaker block looks like. To get it more easier and simpler, let me show you an indicator that will help you spot a breaker block easily. Simply come to indicators and search the word breaker block. Breaker blocks with signals by Lux Algo. Click on it and it will appear on your chart. If you want to learn it more, you can see them like that. Can you see? This is a breaker block right here. This indicator is going to show you a breaker block, literally breaker block. I think the color is not as clear as if you change the background to black, you're going to see it, breaker block. Now you're going to see them time and again on your chart. If I bring it here, the chart actually gives you the most recent. Can you see another breaker block right here, the one I marked for you? You're going to see them on your chart literally. So the indicator will help you to see breaker blocks easily. So let's check a mitigation block and then see how we can use them for a trade entry also. So not far from where we've seen a breaker block, this particular one and this particular one, we have a mitigation block right here. Can you see what I said about the mitigation block? We see price pushed up, come in failure swing, and it came down to this particular place. As price comes back, we want to see it push down to the downside. This is a bearish mitigation block, because as price came here to this level, we want to see it push down. So look at this price action that happened right here. Let me show you. As price came to that area, I hope this is giving me everything I'm looking for. So as price came up, had a failure swing to this level, we have not taken liquidity or grabbed liquidity above. As you can see right here, liquidity is right there. We have not done anything to that liquidity. Now it had a failure swing. As price came, your mitigation block in this regard, since it is a bearish mitigation block, it is going to be the last red candle that price printed right here. This red candle, this particular red candle. I hope I just mark it clear for you. This particular red candle, let me give you the delineation properly. This particular red candle, okay, that is now your what? Your mitigation block. As price comes back to this level, you want to be in this trade, okay, right here. This can happen in any time frame at all, and don't forget to use all the elements of your smart money concept for trade entry. So right here, you're going to see that price gives you the opportunity to have the best trade right here. So as you take trades, you get more opportunities to be in this particular trade. So this is simply how a mitigation block looks like. Let me show you another example if I can see, and then you can go ahead and practice more and more of this. Can we see a mitigation block somewhere close by here? If I see any, I will let you know. Let's check and see if we can see a mitigation block that anyone can see at all. To me, this looks like a mitigation block, and I call it a mitigation block because I see a failure swing. As price comes to this level, come down, had a failure swing, and then push down to this level. As price comes back to the last red candle that price printed, is where I want to take my trade. This last red candle, okay, this last red candle. And then I had some small movement, had some profit pocketed in my pocket. So this is simply how a mitigation block looks like. Another mitigation block right here, look at this. To me, this is a mitigation block. Come down, failure swing. As price comes back to that last red candle right here, the last sell candle, I will take my trade also here. So these are mitigation blocks and breaker blocks. You can go ahead and check it for yourself, practice well, and then you're going to enjoy taking trade with them. Just having the knowledge alone will also help you to know exactly what price may be doing. Thank you guys for watching. If you have any question, let me know in the comments. See you in another video.